Good morning, everyone. Well, after a long time when euro-dollar seemed to be just stuck at the 138 level, on Friday the market continued to feel the reverberations from Thursday's ECB press conference, and euro-dollar continued to move lower. The pair is opening today in Europe below 138 for only the second time since the 9th of April. It was noticeable, though, that Draghi's comments about the ECB Council feeling comfortable about moving in June was only said in the Q&A session, not in the official statement. It could be that he was overstating the Council's view in an effort to keep ratcheting up the talk to keep eurodollar from breaking over 140. There may be some disagreement among the members as to whether a move in June really is appropriate. In that respect, one focus of the markets this week will be the many ECB officials scheduled to speak. ECB Vice President Constancio and Council Member Nowotny today, and many others during the rest of the week, including Council Member Jens Weidmann on Tuesday and Wednesday. Weidmann will probably be the most closely scrutinized speaker. As the hawkish representative of Germany's Bundesbank, if he agrees, then probably everyone agrees. Personally, I expect that they will echo Draghi and that eurodollar is likely to continue to move lower, particularly as positioning in the euro remains relatively high. The dollar's strength against the euro is translating into dollar strength all around this morning. The U.S. currency is opening in Europe above its Friday opening levels against all the other G10 currencies and most of the EM currencies that we track. The other main event this week will be on Wednesday, when the Bank of England releases its inflation report. Investors will want to see whether the committee has changed its view on the degree of spare capacity in the economy. The UK employment rate for March, also coming out on the same day, is expected to decline further below the bank's 7% threshold. This continued fall in unemployment is particularly significant as the Monetary Policy Committee said spare capacity is concentrated in the labor market. If they reduce their assessment of spare capacity, then investors are likely to bring forward their estimate for when UK rates will start to rise. Cable could break through the 170 barrier, although positioning and the technical picture makes further gains for cable difficult. Japan's current account deficit on a seasonally adjusted basis widened more than expected in March to a record level. Figures released today also show that Japanese investors sold a net 1.96 trillion yen in foreign bonds in March, including a record amount of euro-denominated bonds as the Ukraine crisis worsened. Given that the Ukraine situation hasn't gotten any better, we can assume that repatriation is continuing, which is probably helping to shore up the yen temporarily. I expect the money to flow out again at some point as the yield gap remains wide and Japanese stocks continue to decline. Together with a worsening current account position, this largely explains my bearish yen view. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Marshall Gittler, Global Head of FX Strategy at IronFX Global, wishing you solid trading.